Hi everyone! So today we're gonna go through some CPA revision with Angela. I've been studying for CPA financial risk management subject and I'm kind of getting bored. So I thought it would be a worthwhile exercise to go through this together. So let's see what subjects there are, what topics there are so that we know what we're doing today. Okay. So I didn't organize anything, I'm just gonna go through this with you guys. So, financial risk management. The reason why I chose this particular subject is because it has a lot of finance side of things. So like derivatives, hedge accounting, all of this accounting stuff that I haven't really thought about until I got into the stock market after Corona. Anyways, that's the little briefing of why I chose this subject. So for the financial risk management, there are 8 topics. The first one being introduction to financial risk management. So in the subtopic section, there are introduction to risk, defining risk, like financial risk and business risk, enterprise risk, all that kind of stuff. Yeah, so there's enterprise risk management framework, level of sophistication, financial risks, risk in the different industries. So all of this basic foundational stuff for the risk, because this subject is called financial risk management. Okay, module 2. This goes through management of liquidity, debt, and equity. So there are 3 parts to this. First one being part A, cash flow management. This includes the liquidity management, cash management, such as the forecasting and planning, carrying out daily cash procedures, centralizing intercompany flows with treasury, implementing cash-based performance measures, all that kind of stuff, cash disbursement, free cash flow, stress testing. Part B goes into working capital management. There are funding risk and credit risk associated with this. Part C goes through cost of capital and capital structure. So there are qualitative and quantitative factors. I think this is where the WACC comes in, WACC represent. So cost of debt, cost of equity, capital asset pricing model, all that kind of stuff, all that kind of G's. Weighted average cost of capital, that's WACC, and the tax implication to this. Then goes to module 3, which goes through financing and evaluating investments. There are, how many parts are there? Part A, Part B, Part C, Part D. So there are 4 parts to this. So this goes through the sources of funds for business, which includes short and intermediate term financing, long-term debt financing. For short and intermediate ones, there are more like money market instruments. For long-term debt financing, we go through credit ratings, time profile of debt, types of instruments, and all that kind of G's. And there's equity financing. So before one was more like debt side of things, whereas this one is equity. So debt versus equity and how that actually triggered the global financial crisis and European sovereign debt crisis. So yeah, all of that kind of fun stuff. And part B goes through funding for specific types of business structures. I think this was like a small part. So funding for sole traders and partnerships or private companies and other small to medium SMEs. Part C goes through capital budgeting techniques. This is more accounting technical side of things. Accounting rate of return, payback period, NPV, net present value, IRR, internal rate of return, and mutually exclusive projects with different lives, all that kind of stuff. So that's part C. Part B goes through additional issues in capital budgeting. So estimating cash flows, inflation and capital budgeting, all that kind of G's, you know what I'm saying? And then there's adjusted present value approach, which we'll go through together. And then there's module 4, which was the shortest section, but this encompasses most of what we're gonna cover in the whole subject. We will first look at the role of derivatives in the financial risk management, so extent of derivatives use, and there are 3 main categories of derivatives: implications, risk appetite, basis risk, all that kind of stuff. So 4 main financial derivatives that we're gonna look at are futures, forwards, swaps, and options. So we'll delve into this more as we look at it together, and exotic derivatives as well. So more complex type of financial derivatives. Now, module 5, this is interest rate risk management. Yeah, so why interest rates are important, you know? nominal and real rates, pre and post-tax yield curve, all that kind of interest related stuff. And we'll look at key steps in interest risk management. I think this is more risk management in general, but then you intertwine interest into this risk management framework. So step 1, set the core criteria. Step 2, identify exposures. Step 3, appraise risks and set strategies, all that kind of stuff. Yeah, so fixed and floating ratio, hedge policies, all that kind of stuff. So module 6, we're gonna go through the foreign exchange and commodity price risk management. Part A is foreign exchange risk. So currency wars and all that kind of stuff. And also another risk management framework. So foreign exchange risk management. Part B is commodity price risk. And then there's the concept of contango and backwardation. There are a few commodities that we're gonna go through together. So soft commodities, metals, which includes base metals, bulks, energy, precious metals, such as gold. There's also weather commodity. Yeah, there are a lot of interesting stuff there. And the module 7, which is the one that really stresses me out, which is accounting for derivatives and hedge relationships. So hedge accounting, this really grinds my gear. So part A is accounting concept, which includes IFRS 9 financial instruments. This defines derivatives and fair value embedded derivatives, all of that kind of stuff. And then part B is hedge accounting, where you go through how to measure eligible hedge instruments, hedge items, effective hedging, all that kind of technical and complicated stuff. There's different type of hedging. So there's cash flow hedge and fair value hedge, and also there's more complex hedge topics that we're gonna go through together. But I haven't really finished my notes on this because this is taking me a while and it's hard for me to understand everything. So there were fair value hedge, cash flow hedge, and net investments in a foreign operation. I think this had to do with more of how their subsidiaries and foreign parent company that has some cash flow that go through, which requires hedging because of foreign currency transactions, all that kind of stuff. And then there's hedge document requirements. And finally, there's module 8, which is to do with controlling risks. This also goes through the risk management framework and also the responsibilities and obligations of the directors, CFOs, and all the other people out there. And internal control framework, regulations, governance frameworks, operational risk, all that kind of high-level stuff that is to do with governance and all that kind of stuff. Yeah, so this is the brief overview of what we're gonna cover in this subject, financial risk management. And this is an elective subject, so you don't have to choose it. But I chose to go with the hard one, you know. I chose to go with an interesting topic that I want to learn about for my first CPA study, CPA subject. And hopefully I pass. I have a month to go and I don't know if I'm ready, but we'll see how this goes. So this microphone is, Shane gave me this because we have this at work and he said, oh, you look so natural in it. So anyways,